Well, Asian stocks are headed higher this morning after President Trump suggested that the war on Iran could end soon. This followed the huge falls that we saw yesterday as traders reacted to the latest developments. South Korea's Kospi continuing to lead the way up. It's more than 5% in the green. Nikkei following closely behind, 2.5% higher. Now, Mr. Trump's comments also impacting oil markets as crude fell after breaking $100 a barrel on Monday. International benchmark Brent pulled back to nearly $84 a barrel, now about $91 a barrel, while WTI is about $88 to $89 a barrel right now. And for more, we're joined by Paul Sankey. He's president at Sankey Research. Paul, so the headlines coming in fast and furious. What we know now is that the Trump administration is looking at easing sanctions on Russia to solve the supply crunch. First of all, how much could this help, given the amount potentially lost in the Strait of Hormuz? And how much could this help to sustainably bring prices down? Some analysts are saying that probably only a restoration of traffic through the strait can actually truly stabilize prices. And don't forget, we've got G7 preparing to release their oil reserves as well. So taken together, how effective are these measures?
I think they're a short-term band-aid, basically. I mean, obviously, it's very important for India to be able to access Russian crude, so that's very helpful. One of the, obvious most affected by the straits. But for the rest, exactly as you say, we really need to get the strait open, and at the moment, it's not. And I think everyone's shocked that it's been closed so long. Given the importance of everything that's moving through there. But of course, above all, oil. We're concerned about helium. Fertilizer, sulfur, the list goes on. LNG, obviously, it's vital to get it moving, and it just isn't moving as it needs to in a very orderly manner. 50, 60 tankers a day. Whilst there's some tankers sneaking through, we're a long way from solving this problem.
Yeah, just a sidetrack a little bit. The move on easing sanctions on Russia also seems like a bit of a lifeline to Moscow. I mean, what does this mean for the so-called Western energy sanctions regime?
Yeah, exactly. It's a huge lifeline to Vladimir Putin. He was really under a tremendous amount of pressure only a week ago. Everything was against him at that point, and above all, he was being sanctioned from selling oil, particularly, as I mentioned, into India. Suddenly now, Russia has become, a key alleviating supplier of oil, and Vladimir Putin ends up as a big winner. It's worth highlighting that an LNG tanker was sunk in the Mediterranean by the Ukrainians with a drone from Libya. So it gives you an idea of the sort of scale of risk that we're now facing in shipping markets, which is deeply, deeply concerning. But at the same time, these sort of temporary fixes can do what you saw happen, and you mentioned in your preamble that it can suddenly rocket prices lower as well as causing them to rocket higher. And so we're expecting a very volatile ride here while we get this, these sort of individual carve-outs in order to try and make the situation better.
Yeah, Paul, I mean, the sentiment, as you've alluded to, is that we need complete restoration of the strait. But you also say that even if the strait opened, say tomorrow, the first phase of recovery will be a massive inventory, a rebuild. How long could we be looking at elevated oil prices for and are we looking at a new floor?
Well, at the moment, as you know, and you mentioned again just earlier, that the bombs are still flying, and as long as the bombs are flying, these very long-term, very responsible suppliers like Saudi Arabia, like Qatar, they're not going to run the straits with their transponders off. They really have to have a steady, complete certainty around the trade that they're undertaking. And as a result, we don't expect a huge amount of movement here. And every day that passes will further bring down inventories quite considerably. And as you say, it'll then have to be rebuilt. So I think even if we saw complete opening of the straits tomorrow, we would still be in some disarray for at least a month. Restarting these facilities is difficult, and we've seen countries shutting in oil production and gas production. Again, you can't just turn that stuff straight back on. It takes time to recover it. And every day that passes, the situation continues to deteriorate. So I'm surprised that the market was so ready to declare this as, all over on the president's words, because as we've been saying, in fact, it tends to be the loser that gets to choose when the war ends. And we're just not sure that Iran is done with this Straits of Hormuz situation, anything like yet.
Yeah, and indeed, we're seeing that Asia's rebounded today after that deep plunge yesterday, especially for Japan, South Korea. Now, you say that Asian consumers, they will have to build higher levels of ongoing inventory. I mean, are we effectively looking at higher energy costs? And for how long could that last? And maybe for a longer term view, I mean, do you foresee permanent changes to energy storage strategies in Asia, Europe even?
We do, yeah, because the Straits of Hormuz has never been shut even for a day. And so the risk now has to be raised is an ongoing concern. We haven't dealt with the Houthis yet in the Gulf of Aden. They've continued to disrupt Suez traffic. So we expect tanker journeys will have to be longer. They'll need higher insurance. And then you've seen, and we've focused in one particular instance in a note that we did on Taiwan, you've seen that Taiwan has shut its nuclear plants. It really has only about 14 days of LNG inventory and possibly less than that of helium inventory. Suddenly now they're going to have to absolutely have a much higher ongoing level of inventory to make sure that they don't, face this kind of risk again. And again, we simply haven't solved the problem because the distances here are so long that actually the shortages haven't showed up yet because of the time it takes for everything to transit. Stuff is still arriving in Taiwan, stuff is still arriving in South Korea from pre-crisis. But of course, as the days pass, that eventually is going to feed through the floating pipeline, as we call it, and you're going to see some severe shortages and issues. The closest representation of the immediate problem is, of course, jet fuel prices, which is the most difficult to make and transport and store of all the oil products. And there you've seen, as you know, huge price increases in Asia.
Right. Paul, we thank you for your time today. Paul Sankey there, president at Sankey Research.